But if I could give you something to take home, that's probably one of the biggest that you'll find. That's one of the most important factors in trading is being able to trade. To me, simple. Make your trading simple. Trade a pure naked chart, meaning um, just being able to trade from price action. I mean, that is like to me like the golden tip that I can provide and give you because if you can perfect trading from a naked chart with nothing else on it and understanding what the market is doing, meaning trading pure price action, I mean, that in itself is a testament and a test to show that you could trade with nothing else, then you're doing something right. Okay? And if you're doing that time and time again, every single day with consistency, then you're definitely going to start making money. Okay? I'm telling you, like price action is um, understanding market structure, being able to read the market, being able to trade based purely on price action with nothing else. Hands down, you will be successful. Hey guys, welcome back to the channel. This is Future Trading with Mike, and today is March the 5th. It is Saturday. Not going to be doing a recorded live session here, of course, because the market's closed. And I'm a futures market trader, so I trade the Emini S&P 500 futures. That's the ES, derivative of the big index, the S&P 500. Some of you guys may trade the Nasdaq or the Dow or the Russell. It doesn't really matter. So I 5 days out of the week, pretty much, I'm posting to my channel, and we can come and watch, the recorded sessions here, and I kind of give little tidbits, and, tips of how you can improve your trading, or give you a basically walk you through the strategy of how I trade, so you can actually see me trading, and as I take my trades, you can see, I explain and discuss, why I took that trade, and prior to that, I kind of give more so like a little pre-market analysis before I actually start trading. So you see on my chart, my monitor here, I have 4 different charts up, and I like trading the range style charts over any other chart style, like over maybe the time-based period charts, because to me, the range just is a lot more cleaner to me. I can zoom in and focus on and refine areas that just look cleaner on the charts to me. So. But that's not what this video is about today. I want to start off and thank everyone who's currently already subscribed to the channel. That means you've already hit the sub button, the subscribe button, that red button. And if you have not clicked on the bell little icon, which is the post notification, please click on that. It's going to help you out basically because each time I upload to the channel, you're going to get a real-time notification to whatever device you may have your alert set up to. So each time I drop a video, you'll be informed of it. If it's your first time watching one of the videos, well, it's the weekend. Like I said, I'm a live price action trader, so I trade primarily during the week. So you can go back. I have over 160 videos on the channel too. You can go back and see me actually live trading the ES. And even if you're not an ES trader, I mean, don't just stop here. Continue to watch because the strategy, which I'm going to show you guys some examples in this actual video here of how I trade. If this is your first time watching one of the videos, but the strategy I use is just basically trading pullbacks or tracements to certain areas of which I call high probability areas of support and resistance. So, and I'm a supply and demand trader, so I look for those good concrete areas where a lot of buying came out of, or a lot of selling came out of. So if it's your first time watching one of the videos, go ahead now. Take the time to hit that little red button or that button there on the page here, the YouTube channel page here, that subscribe button, okay? And then also hit that little bell icon next to it so that you never miss one of the videos, okay? So in today's video, this is pretty much for, I'm not gonna say this is strictly surrounding those who may be beginner traders or even intermediate traders. It could be for advanced or pro level traders as well. But today I just want to really, it kind of centers more so around people who are beginner traders. So this is kind of a day trading beginner guide, basically giving away basic, tips or hints to those that may be on the journey or venture of trying to start their day trading. Maybe you're currently, sim trading, paper trading, whatever the case may be, and maybe you're doing well, and maybe you're taking some type of evaluation to where you passed or going through that step-by-step process and you're almost there, and you say, well, I've been profiting, paper trading, and I've been in the green. And that's the biggest thing to always remember is that in trading, something I learned a long time ago. And everybody has their, I guess, different opinion about this. But to me, if you're not in the green every single day, I'm not saying you won't have a bad trade or take a loss on one of your losing trades during your session of trading. But to me, you should be ending up in the green or even break even. You don't want to be in the red. There are lots of traders out there who they'll being a red one day, green next day, then red next day. To me, that's just like inconsistency. So you have to be consistent. So you have to find that to where you're consistent each day in trading. And when you get there, and I'm not just saying 1 week, but taking multiple, allowing multiple weeks to pass or months to pass to where you're in the green every single day while you're sitting on paper trading. And even if if you're doing that evaluation, uh, taking those evaluations that some of these companies out here offer, that's a great thing. I'm not stuck on the big, I guess, the prop type firm things where you pass an evaluation and you actually they give you a funded account to trade from. I'm not saying I'm against it. I think there's some good companies out there that probably that you could fare pretty well with, and I just hear a lot of negative things about certain ones, whatever the case is. But I trade my own capital. Not saying you can't do so. Go to one of these companies and start off that way. It could be a great opportunity. I hear companies like Top Step. I'm just throwing that name out there. I'm not sponsored by them in any kind of way. I'm just saying that I hear good things about them. So, all right. So let's talk about as a beginner what you should be looking for, and maybe if you're just starting out and not even have don't know where to begin at. But first and foremost, you got to decide if this is something you really want to do. Maybe it's something that a friend of yours or family member of yours had told you about. You heard about trading, and you've been, well, what's a day trader? Kind of asking that question. There's so many different, I guess, asset classes or different markets you can actually trade, I should say, because even within the future markets, you have different categories of future um, I guess asset classes that you can actually trade in futures. You could trade alone, like I trade futures, but I trade the equities and the indices within the future markets. But you have grains, you have currencies you could trade. Um, there are metals you could trade, um, meats you could trade. There's so many different things that you can actually trade with the future markets. So some people may trade stocks. I'm not knocking stock traders at all. I mean, some people, fare pretty well in stocks. And I'm not saying I would never buy stocks because stocks could be, it's actually something that I think people should add to their portfolio, because if you could find interest in particular stocks or particular companies you want to take interest in, I always believe that whatever you're passionate about, then those should be the areas of interest that you should maybe for financially sound surround yourself around, meaning putting money or putting money in those areas. So if there's some companies out there that you may take interest in as far as from a stock standpoint, if you can get in at a good price, then that's a good thing. Could be a good thing to add to your portfolio. I don't trade options. And I don't trade Forex neither, okay? I'm not knocking any of those as well, but I'm just a futures trader, okay? And I love to trade the ES. All right. So, first and foremost, what you're going to need to do is you're going to need to, if you're really interested in trading, is read up on whatever, asset class that you're actually going to be trading, whether it's futures, options, stocks, because they're different. Stocks are going to be different than futures or options. You have to read to understand, how those different markets actually work. The difference in between the two, or two, three, four. Meaning even forex. You have to do your homework. So pick up a good book or two that you can read up on. But I was introduced to futures markets years back, and I knew what day trading was, just no different than anyone else who's starting out. Oh, day trading means somebody's sitting at, home or office space, whatever the case is, and they just trade the markets. But I didn't know a lot about, you know, specific markets, whatever the case is. Yeah, of course, I knew about stocks. And even when I was younger, I thought about, trading and buying stocks. But I kind of fine tune things, and when someone introduced me to the futures markets, I just stuck with it. I never deviated or looked towards anything else. And to me, I love the future markets. I love trading them. Okay, I think it's the closest thing, especially when it comes to trading, like the indices that you can possibly do trading next to. So that's why I like trading the future market, especially the indices or the indexes. So. So you have to be able to figure out which markets you want to trade or what market you want to actually trade. Then you go from there and figuring out, okay, do I have the capital to be able to trade this particular type of market? I'm not saying you got to start off and, basically you're prepping yourself. You're doing the research, you're doing the homework to identify if this is even something that, day trading is something you'd be interested in. Now, there's different styles of trading. You got day trading, you got swing trading, you got position trading. I don't position trade, I don't swing trade. I don't, that means I'm putting on trades for to ride for a whole day or a week or months at the end. That's not my style of trading. Um, I like to trade just as if I was working a daily job. I like to be in the market, trade, wait for the next setup. So basically, it's a routine process, but it's fun to me because you are testing your boundaries. You're always testing yourself against what the market is doing because the market is an evolving beast. It's an evolving creature, just as we as humans are. One day you may be feeling like this, next day you may be feeling, it moves. It has its ebbs and flows, and and you have to be able to trade accordingly. So to me, it's just like how some people like to play video games. It's not a video game to me, but it is a intellectual game of chess to me, I'd say, because you want to be able to move with the market, not against it. Okay, so that's one of the biggest tips I give you right now is always be and know when to be. You have to move with the market. And when I say move with the market, move with the institutions because they drive the market. They're injecting big money into the markets every single day. And I say this all the time in my videos. We are as retail traders, um, we're just looking to get a few breadcrumbs off the plate and ride their coattail in the same direction. So you have to be every day doing your homework, trying to figure out what the market is going to do. And some people say bias, I say direction. You have to figure out what that direction of the market is, what it's moving in, and trade accordingly. The market can shift at any given point, guys. It could be, moving to the upside and then hit a pivot and boom, it's slamming to the downside. And sometimes you have, news that comes out economically that affects the market as well. So, there's things you always have to do your homework on when it comes to trading. So, it's just like being trained and going to school to be skilled in a certain craft or career, opportunity, whatever the case is. Same thing. You get trained for it, and then you continuously train and becoming educated about certain things. And it's no different in trading. You have to always keep your mind open, always evolving and changing as a person, as the market is changing. Okay, so that's one thing. Okay, I want to say that tip number one is I want to say to you is that when you're trading, always make sure you're trading in the right direction. Okay, um, you know, I guess I'm going to be doing a mixed bag of tips and hints and things like that. Just kind of throwing them out there for people. Um, Moving on from there, you really want to find a good trading platform to trade. That part I said about trading in the right direction, that will come into play once everything's set up. You got your platform set up, you got your data feed set up, you got, you start diving into doing simulation trading, whatever the case is, and you have a strategy that you've learned that you want to, try to put to the test and back test, back test, back test. Always make sure you do that. Okay. Back testing means you're going back on your charts while the session's down and doing kind of replays to where you're basically going in and seeing that strategy work time and time again. It's because it's all about that win to loss ratio in a sense. You want to be winning more than losing, okay, and making sure that strategy actually works. So platforms out there. I mean, you guys can Google them. Excuse me. There's tons of them out there. I mean, I trade InterTrader. I see some guys today, which back when I started, I don't believe, I don't even think it existed. But you got cloud-based programs out there now, platforms like TraderBait. I see guys using those today. When I say guys, I'm talking about both both sides of the gender, male and female. So when I say guys, I'm referring to everyone collectively, not just men. Okay, so I see different people trading different, on different platforms. Thinkorswim. There's a diverse, um, I guess, platform category out there, or different platforms you can actually trade. You know what I mean, that you can actually use to trade future markets with. So, um, but yeah, you have different platforms that you can actually trade futures on. I mean, you have multi charts. Um, let's see what else they have. They have out there. You have Investor RT. I've heard about that one. Let's see. I think Jigsaw Trading is another company out there. Multi-Charts Net, MetaTrader, TradingView. Um, I'm familiar with that one, and so your broker may, that's another thing. Is finding a good broker, a broker that where you have a broker and a platform that kind of pair together, meaning being able to trade from the platform, but it's synced in with the broker, um, and handling your trade transactions. Okay, so the platform just allows you to trade, um, provide a data feed, you know. So it's different things because you have to really like look for a trading platform, look for a data feed provider, and find a good broker. And most brokers are going to be, they're already going to be kind of synced in together with a data feed provider. And sometimes you may find an all-in like maybe an indicator, um, where you have you know, data feed, and they offer brokerage service as well. So, nothing wrong with InterTrader. I've been using it for years. I haven't taken the time to really see if there's anything better out there than InterTrader. I'm sure there may be today. I'm not knocking InterTrader at all. I've been using it for years, and it's worked fine for me. But there are other outlets out there, other platforms out there that today that probably a little more robust, and back end as far as programming may be a little bit better when it comes to performance, and not just performance, but maybe feature wise too. They may offer, you know, some things that another platform may not offer. Different platforms offer different things, so you have to kind of do your own homework to see which works better. For me, NinjaTrader, I'm fine with it for right now. I'm not saying I'm gonna stick with it forever, but I've been with them for a period of time. Um, do your homework and find a good broker as well. When I came on board with NinjaTrader, I currently use my broker is AMP Futures, but they have severed ties, NinjaTrader and AMP, many years ago, business wise. So I can know as of right now, anyone new that's been looking to kind of jump on band or on board with AMP to trade and use NinjaTrader, you can't do so. Those that were existing customers of both in the past, they allow that um, that partnership or what that they once had before to coexist still. If and only if you were a you paid for the services of both before. So if you were on board with InterTrader when AMP was offering, brokerage and services using InterTrader back then you could use both still to this day. But the moment you sever ties with, one or the other, then it ends everything. So that marriage between the two still coexists if you were using them years back. I've been doing this for over 10 years now, so I want to say it's probably been maybe I'll probably maybe 5, 6 years back, could be a little longer than that where they severitized business wise. But there are plenty of people out there today who actually use NinjaTrader and still AMP as the brokerage. The data feed I use is through CQG, which is still through when I started using AMP as my brokerage of choice. The data feed was kind of a combined service that they had. So, which is a matter of, okay, paying for the license through the NinjaTrader. The NinjaTrader gives you options. You have the a lease option, which I think is quarterly. I want to say it's like $60 a month, something like that. But you come out better buying the license right out, meaning a one-time fee. I think it's like $1,100. And check with NinjaTrader because I believe certain times in the year they offer, I think it's either 1099 or 999. Don't quote me on that. I think right now I'm sorry, I think it's 999. And sometime a year they give you $100 off, and so you can actually buy the lifetime license for $1,000, and that's lifetime, meaning you own the rights to your license, and you don't have to pay any other fees to using the platform other than of course, your commissions and your data fees and things like that. But outside of that, it's a one-time license free fee, and for lifetime use of the platform. Okay, but you do have the option to lease it just as well. But I do know there are some perks of getting the license or buying the license right out. You have the opportunity to where they offer more bundled indicator packages, like you have the volume package, and there's some other things. Look it up online. Go to ninjatrader.com and look at the difference. They outline. I tell you what, we can look at it right while I'm here. Let's see, Ninja Trader. We'll go ahead and take a look at it. Look and see if we can see. This is. Sorry about that, guys. Okay. Let's go to. Where's it at? Down here at the bottom. Let's see. Get started. Let's see. Count. Let's see. Let's see. Where is it at? Okay, license comparison. Here we go, right here. So scroll down to the bottom once you get to the main page, ninjatrader.com. Scroll down to where it says license information. Which license is right for me? That's a choice you're gonna have to make yourself. You have the free, lease, lifetime. So and these checks show you what one uh, the one license offers you over the other one, guys. So you can see here what the lifetime gives you. It gives you the order flow package, which the lease doesn't give you. You pretty much get everything the same when it comes to lease and the lifetime with the premium features, but with the lifetime you get the order flow package, which here's a very good package. And I don't use it because back then they didn't have an order flow package. So I bought the volume profile you see on my charts is with a company called Disco Trading, and that's discotrading.com. It's called the Range Profile Volume Package, and I love it. And for the price, it was excellent. So that's why I use it. So yeah, it's just a one-time payment, $1,100. It's $10.99 right here. Like I said, sometimes throughout the year you can catch it to where you send your email and say, "Hey, we're offering a lifetime license for $1,000." So it's a great opportunity. A great, I like NinjaTrader. Nothing wrong with it at all. But you have to make that choice too, as far as what platform may suit your needs the best. Okay, and that's pretty much it when it comes to actually getting set up. I mean, you establish choose your platform, choose the broker of choice you want to use that works hand in hand with the platform you're using. So basically, the two can kind of sync together when you're trading, and you choose your data feed provider. Okay, outside of that, I don't know the ins and outs of every platform and what their fees are. I only know what NinjaTrader is. So do your homework. You may find one that's free of charge out there. Tradeovate, I don't know what they charge. So there's so many of them out there, so you have to do your homework to find out. Okay, so like I said, you guys have to kind of do your homework and find if find a platform that works best for you, a broker and data feed provider as well. Some of these brokers they offer data feed services tied into you know their fees, whatever the case is. So kind of do your homework, kind of assess the fees and see which one you come out better on, come out better on, which one will be better in your pockets. Outside of that, let's move on. And so I talked about the platforms and talked about, the different, not about the different brokerage companies out there, because there's, once you kind of look up and do your homework about pertaining to which platform they actually use, you'll start finding, a broker that you can actually tie in with use with the platform and a data feed provider, because all of them are different, guys, as far as like, is their data feed separated from what the broker services the broker companies actually are offering? Do they have do they charge a fee? Do the brokerage company charge a fee for the data service? Is it part of? Is it included in? Just kind of do your homework and kind of see which works best for you. So we'll take a look here. looking at the chart here, you see my charts here. We're talking a little bit about this. So I just want to kind of give a quick rundown of what I look for daily. You guys are watching the videos, you already know. I look at my 60 range chart, and I already discussed, I like using the 60 range, not 60, excuse me, the range type charts over, other charts, whether it's, like I said, your time-based charts, things like that. You can go in, like here in NinjaTrader, click on right here on a data series, and let's see, bring it up for me. Yeah, there we go. Sorry about that. Type. So you got tick, range, volume, second, minute. So you got all those different options. I use range. I like to use range, and I've been using it for years and it works fine for me. You guys that watch the videos, you see that, the reason why I use range charts, I talk about it. It's just a lot cleaner looking to me. But I always start off by looking at my 60 range chart. Now here's a hint, not a hint, here's a tip. A tip when trading, okay, especially as a beginner. And I talk about this in a couple of videos about how to trade and be in the right direction. And basically, you just want to be able to find a good, solid area where prices pull into, whether it's support, resistance, primarily supply and demand. To me, that's the most important thing about when it comes to actual trading, to put you in the right direction. Okay, so like right here, when price pushed up here and pulled back, okay. It came into this area or down here, this area of demand right here, okay? This is off a 60 range chart, okay? All right, pushed up, pull back, boom, pushed higher here, price comes back, taps into this area, moves into this area of demand, takes off, okay? So here's a tip. I talk about this. Here's what to look for. If you're finding it hard to find out which direction to be in when the market is, moving, and you're trying to say, well, I don't know, I need to figure out, should I be in a buy mode or sell mode. Pay attention to the higher time frame. I use 60 range chart. You can use a 60-minute chart, whatever that may be. Price pulls back. Here's an area right here. This is demand. A lot of buying took place in this area here. Okay, so when price pulls back to it, what's going to happen here? It's going to be probably more so some rejection. I do not take a trade because I'm not a position swing trader off the higher time frame chart. Not to say you can't scale down to a chart that's slightly lower than this one here, maybe a lower time frame chart. But I'm gonna show you what I do. What I do is I look at the higher time frame to gauge my direction of what the market, which way the market's trying to move. So when I saw this price coming back here and saw price was rejecting right here or had a possibility of rejecting, I'm interested when price gets right here because I think and I believe the price is going to probably push up, and may test this high again. And it does. You can see here in 60 range. But this is all in hindsight. I'm just showing you how to depict the direction, giving you a tip of what to do when it comes to trying to figure out the direction that you should be trading in. So, and I'll show it to you on a lower time frame chart. We're going to take a look at that. So this was on the 27th of no, 28th of February. 28th of February. Price pushes up and pulls back to this area right here, okay? So if we go over and look at the 28th of February, 12 range. Those that watch my channel, I love the 12 range chart, and that's the chart that I use primarily to mark my zones with, okay? So we'll go back to the 27th of February, 28th of February, sorry about that. 28th, and here we go. 28th. All right. We're in this, sorry about that. In this area, okay? And what time was that? We can mark that. That was at, okay, that was as soon as the market opened up into the Globex session. Yeah, okay, Globex session there. So that was around 6 in the evening, 6, 7 in the evening. So let's see, where was that at? Right here, okay? And I believe if we scroll that, okay, so that area was right here, in this area here. This was the area right here off of the 60 range chart, okay? So we start to see price. So price comes in, hits that area of demand. What I want to start doing is seeing price start moving to the upside, breaking structure, back up to the upside, okay? And it does that, all right? We kind of went flat here for a moment. It starts to break structure to the upside, meaning breaking structure over here. Let's blow this up a little larger so you can see it. Move this down. Okay. Let's bring this up here so you can see this. Okay, here we go. All right, so this is the area of demand off the 60 range. So price pulls back into that area of demand. When price pulls back into that area of demand, I'm looking for rejection, like I said, okay? Once I see price of all that area that price pulled back into, that buying area, okay, which is the area of demand, and then I start to see price push to the upside, breaking structure, meaning breaking levels where price is moving to the downside, starts to take out levels, okay? Moving higher. So the moment price starts pushing to the upside, breaking back, pushing higher, okay? All right? So, like right here, all right? Price started breaking these little areas to the upside. Pushes up, pulls back, okay? And it breaks higher, okay? So, when I see price breaking structure to the upside, I'm just using this as an example, okay? To the upside, okay? I know this area right here is going to be an area of demand off the 12 range. So, I'm identify an area of demand off the 60 range. Now I'm going to start to see price break structure on the 12 range, the lower time frame. And when it does that, I'm looking for an area of demand to buy off the 12 range. It's simple as that. And if you're shorting, then you want to be looking for price to move up to an area of supply off the 60 range. Once it rejects that area off the 60 range, I want to move down to a lower time frame, which is the 12 range, to start to see price moving in the same direction, breaking structure to the downside. Then pulling back to an area where tracing back to an area on the 12 range to an area of supply and go short. So here, price pushes up, pulls back, pushes higher, taking out structure here, okay? Here's the area of demand. When price pulls back to this area right here, okay, this is an area where I'm interested in going long, okay? You can go long, all right? So trading is not complex. I think people find it to be complex because I think one of the biggest things is people have a hard time figuring out what the market is actually trying to do, meaning reading the market, trying to figure out the direction of the market. So first and foremost, figure out the direction of the market and always start with the higher time frame. Always look for a good support resistance area on your higher time frame where price can actually reject it, and then scale down to a lower time frame chart. That's one of the biggest tips I could tell you. If you're starting out and you follow that, then you'll do well. Use the higher time frame to put you in the right direction. Then scale down and trade with the higher time frame. But wait for price to start breaking structure and then pull back to an area of support on 12 range, say for instance, or whatever lower time frame you use, okay? So if you maybe use a 60-minute and a 5-minute chart, you know, if you're moving with find out the direction that the 60-minute chart is making, and then if the 5-minute chart is more so your anchor chart to use to market levels and trade off of, then wait for price to do the same. Start breaking structure. Okay, so it came back to an area of demand on the 60-minute. Prices bounce, moving higher, comes back to an area on. Okay, so at that point I'm switching over to my 5-minute. Price starts breaking structure to the upside on the 5-minute, pulls back to an area of demand or support on the 5-minute. Then I'm looking for rejection. Take the trade, going long. Okay, so because you already know the direction is to the upside off the higher time frame, so just trade it on a pullback on the lower time frame. Okay, but wait for price to break structure. Another tip I can give you is when you first start off, guys, do not flood your charts with a lot of indicators and things like that. First of all, a lot of indicators are cause unless you got a high performance machine that's really that can really move and a lot of processing power. You're going to find add a lot of indicators to your charts. Are going to slow your system down, cause things to lag, a lock up, and you may get into a trade way too late or way too early, whatever the case is. So, what I can recommend to you, how I trade it, if you can trade this way, then you know you're on your way to trading. Okay, pure naked chart, meaning only trading price action. Okay, and some people do this day in and day out that are pro traders and they don't need anything else. Okay, what you see on my charts, I don't have a lot cluttered on my charts. I just recently put the Bollinger Band up here just to kind of test some things. I don't, most times when I'm trading in a week, you guys see me, I'm not really using it. I look at it, but I'm not really. I'm looking more at levels, looking at price action more than anything. I'm a price action trader. Volume profile. The volume is extremely important to me because I use volume when I start marking my levels. I use volume to see if it's at an area of confluency for me to trade from, meaning a high probable area. So I look at make sure that the level to me is a solid area, okay, that I mark, and then I look at position wise where that level is resting, or when price pulls back to that area, okay. Um, and anyone that knows how I trade, I like to trade if I'm going long the lower edge of a high volume area, and if I'm selling the upper edge of a high volume area, okay. Chemical delta, that's important. Um, to me, I don't need it to trade, but it does help a lot of people out because, and then you find sometimes with price and chemical delta are like, chemical delta may not be following suit with price and vice versa, whatever the case may be. But a lot of times, what cumulative delta is the time of sales reading. So, basically what it's telling you is telling you the amount of, not the amount, but it's showing you the influx of buy or sell orders that are coming to the market. Okay, but what I'm trying to say in a nutshell is that if you can trade 100% price action on a naked chart, meaning nothing but price, nothing but the candles, and you can trade that way, then you're well on your way, guys. To be honest with you, indicators are just most indicators are lagging. Mostly all cumulative delta not lagging. It's a level 2 indicator. Um, volume profile is not lagging. It's develops and forms as price is moving. Okay, so to me, the only thing I ever would use, I don't use like SMAs or EMAs. Even though Bollinger Band, it does have 20 period moving average. I'm not using it primarily 99% of the time I'm not using it. I may glance at it, but I don't need it to trade. I trade pure price action, looking just purely at that and volume. Okay, but so that's what I'm telling you. One of the biggest tips I can give you is that if you can find a way to just make things as simple and basic as possible in trade price action, you will be in a good position to be able to trade and profit and make money. Because if you can trade with nothing else but studying price action, um, then it'd be a plus for you. Trust me. Okay, so let's see. Okay, so just all in all, in a nutshell, we'll kind of just give a rundown, like you know, things I'd like to point out, maybe some tips or whatever the case is. I just want to reiterate things. First, ask yourself: is trading anything or something you may be interested in, even if whoever maybe have mentioned it to you. You may have seen them trade. You got to ask yourself, is this for me? Do your homework. Do your research. See if it's something that you may be interested in doing. Because if you're not passionate about, if I'll say this to you guys, passion is what fuels and drives us as people to want to become great at whatever it is in life we choose to do. And if you're not passionate about it, then just quit. You can't force yourself to be passionate about something. It has to be. It has to be there. It has to be in you. Okay. So do your homework. One. Two. Um, once you cross that threshold of saying yes, I'm passionate about trading, then start doing your homework to find you a good trading platform to use for whatever you're going to trade, whatever market. Okay. Whether stocks, bonds, whatever the case. No, excuse me, not stocks, bonds, stocks, forex. Uh, futures, whatever it's going to be, options. Um, paired with that, find you a good broker. Paired with that, good data feed provider. And some, like I said, some things like the broker they may have a package where everything's tied in together, meaning they're all fees included, whatever the case is. Not sure, so you have to do your homework to kind of, air out the fees and things and what they charge, what the platform companies charge, what the brokerage company charges, what the data feed companies charge. The broker may offer a data feed have a data feed provider already lined up that way they, you know, have some type of package fee um, for you that they offer. I'm not sure, and then two, I mean three, um, back test. Learn a strategy first of all. Learn a strategy. Um, and there's so many gurus out there that will try to show you different strategies or sell you something that they say this is a strategy of how you can trade, get you to buy into something. I don't believe in all that BS or that crap out there. Spend your time, do some homework. Hey, watch my channel. Watch the videos. I have plenty of videos on here where you can learn a simple way of trading. It's very simple, you know. Um, so you know, understand and define a strategy that will work for you. Okay, you don't have to trade the way you don't have to trade the way I do. I'm just throwing it out there. Okay, but make sure you back test that strategy time and time again. Okay, that's what I'm saying. Okay, and make sure that it actually works, and then start trading it. Move on to kind of paper trading, simulation trading, whatever the case is, and see how well it works. Okay, um, but there's some things, like I said before, you have to figure out in doing that, and that is um, you've got to understand market structure. You got to understand the direction of the market. That's the biggest thing. If you're not on the right side of the fence, then you're not going to make money in trading. As simple as that. So backtest your strategy against whatever it is, backtest it and just make sure it works. But also make sure you're moving in the same direction of what the market is, and use multiple charts. I think I'm not saying you have to have 10 different charts up. Um, Honestly, you can trade with two charts, a higher time frame and one maybe that's a lower time frame. Your anchor or your entry chart, whatever the case is. So just be able to choose, and identify which direction the market's moving in. But if I could give you something to take home, that's probably one of the biggest that you'll find. That's one of the most important factors in trading is being able to trade. To me, simple. Make your trading simple. Trade a pure naked chart, meaning just being able to trade from price action. I mean, that is like to me like the golden tip that I could provide and give you, because if you can perfect trading from a naked chart with nothing else on it and understanding what the market is doing, meaning trading pure price action, I mean, that in itself is a testament and a test to show that you could trade with nothing else, then you're doing something right. Okay? And if you're doing that time and time again, every single day with consistency, then you're definitely going to start making money. Okay? I'm telling you, like price action is um, understanding market structure, being able to read the market, being able to trade based purely on price action with nothing else. Hands down, you will be successful. I promise you. Okay? Just take the time, understand price action. Okay? And I'm going to leave it like that. So I appreciate everyone who's tuned in and watched the video today. If you don't mind, if it's your first time watching one of the videos, go ahead and subscribe to the channel. I'll be back on Monday, trading live. So see you guys on Monday. And that's going to do it. Take care.